All right, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivaltrades.com for swing trading alerts and analysis. Anyways, let's get into the markets this week. So stocks ended pretty mixed for the most part in a very volatile OPEX week last week. So you can see here we started off basically flat and really had a sharp reversal on Wednesday, and then a little bit of follow through to the downside on Thursday, and a really good reversal on Friday. We actually hit here on the S&P Spider, just in the two trading sessions from Wednesday to Thursday, we actually hit a 50% retrace from the December bottom to the recent pivot high. So pretty sharp sell-off there, and then a really sharp reversal on Friday. So a little bit of a mixed bag here, as neither bulls nor bears really gained a ton of traction here, although I'll kind of give the bulls a little bit of a bias, as we did end the week on a positive note here. So what's next for next week? It's a little hard to say. So on one hand, cyclically, I've been expecting a down move towards the latter part of January, and we did get a kind of trigger there. We had a pretty steep sell-off, obviously, on Wednesday, but then we also kind of finished the week decently well. And if we take a look at the weekly time frame here, you're going to see that really all we did was just kind of put in like a little inside hammer. So nothing terrible here. You basically just tested the lows of the previous week for the most part, and then you closed back up in, relatively flattish to lower territory, whereas the NASDAQ actually closed positive for the week, and it was able to close back above the 220 moving average here on the weekly time frame. So, NASDAQ showing a little bit more relative strength. Again, we talked about this last month at the end of the year, said the NASDAQ should have the most upside between the four major indices here, and that has been the case so far. As a lot of that tax loss selling is abated, and it does, you do get that kind of relief rally here. So we are above the 20 and 200 right now, but again, this does not mean that this is the time to buy or anything like that. Remember, we do have earnings season coming up here. We're right in the middle of it now. Some big tech reporting this week and next week, and then we also have the FOMC here. As you can see, just because we get above certain levels here, take a look at the NASDAQ back in August, we got above that 20. We got above it a couple of times in December. It doesn't mean that we're, home free here. So again, I'm still looking for more downside in the month of February. As far as next week, it's a little hard to say. Again, there is earnings. And then even once some of those earnings get out of the way, the market is going to have to look ahead to the Fed the following week. And then you have Apple, Amazon, Google, and Meta reporting right in the heart of the FOMC report, right around that same time. So I think markets may be a little bit range bound here, but if we continue to rally like we have over the last 2 to 3 weeks, and if we just continue higher, it's going to be a lot more likely that the FOMC and the tail end of earnings is going to be a sell to news. So just be aware of that moving forward. If it's more sideways, then it can kind of go either way here. But the more overbought you get going into a news event, the more likely it is that you get kind of an opposite reaction there. As far as levels here, so triple Qs never quite filled that gap there on the daily, so that would be a level there. And then we also have this down sloping trend line and that 200 moving average, which was never back tested. So those would be your levels there on the upside if we continue to rally. Spiders here, we already got to that gap from December. So then you have that pivot high up there. And then if you get through that, there's a ton of resistance up at 410. So those would be your levels there on the upside if we were to continue higher here. Looking at our sectors here, let's start off with the semiconductors as usual. Again, semis did pull back like everything else on Wednesday, Thursday, and then had a decent rebound on Friday. Again, your obvious level there, first level's double top. Although we did pull back kind of near that, so I would say you can probably pierce through that, maybe even up to 240. That's going to be a pretty good resistance level. If you somehow get through that, then 245 is a big level there. For the semis, that would be kind of like your max move for the SMH IGV. Also with a decent move off the lows Friday. Finished basically near that high from Wednesday. If it continues higher, you got the 200 there. I think it can get through that. Probably about 280. Again, 279 is this pivot high here. So that's going to be your upside level there for cloud software. But a nice reversal for IGV on Friday. Dow Transport's had a pretty steep decline. So we rallied all the way up Wednesday morning to about 14.7, and then sharply reversed back below this trend line. We touched the 50 moving average on Thursday, and we got a nice bounce off that. I'm not sure where they want to go here in the near term. We'll have to see what it looks like. They do. I think we do have a lot of trucking names reporting next week, so that can be a little bit of a market mover. I think FedEx, UPS are this week as well. A lot of the airlines got out of the way already, in that, we had that big move up and then a pretty good sell off there. Off of that ended up being kind of a sell the news move for some of the airlines. But if this does continue higher, if you guys remember back in, I would say October, November, I said that transports could get up to 15,000, and you can see obviously we got very close, got up to 14.8. And never quite got there. So maybe they want to get up there now. That could be a possibility here. Again, it's very tough to tell this week with earnings. So there's going to be, I can never pretend to know what the market's reaction is going to be to earnings announcements. And it does look like we're going to be a little bit, I would say Monday for sure, we'll probably be a little bit sideways, as I think Microsoft and Visa report Tuesday. So there might be a little bit of just kind of, pause type action for Monday. But either way, that that would be your big level there for the DJT, right around that 15,000 handle, if we can get up there. If not, if we can't take out this this pivot here and close above it, then possibly we could roll over before then. So anyways, let's move over here to interest rates. So let's look at the 30-year first TYX. Nothing terrible here for I should say for bonds, I should say. If we're looking at ZB, this is actually a decent pattern, which is obviously inverse correlated to the yield here. You haven't taken out this pivot yet, and you do have the 200 moving average up sloping, but I wouldn't consider that major support at this point, considering we came down, got close to it, then put in a lower high. I would say the bigger level here would be right around 3.2, 3.25, right in this area here. So there's a big gap fill right in that zone, and then there's that pivot there as well, if we were to continue lower. But again, if this continues to go sideways here, it could flag for a move down. So just be aware yields might have one more move lower here. The 10-year, on the other hand, TNX, has actually taken this low out, at least on a nominal basis. So you have made lower lows there. So this can definitely get through the 200 moving average, if you ask me. And then that gap coincides right here at 31.34 on the TNX. So that would be your bigger level there for the 10-year. As far as the 2-year futures here, again, nothing wrong here. It's still holding up really well. And you had a nice move on Wednesday, and now just kind of consolidating sideways. Again, I do think it wants to get up to that target there before it's all said and done. So bonds holding up reasonably well. Currently, I will caveat that, though, with, just to make sure everybody's aware. The yield curves here are still very inverted here. So 2s and 10s, basically 70 basis points. And then the 3-month 10-year, the big one, 117 basis point inversion there. And that's basically at the lows currently. So just keep that, in your mind. Anyways, over to home builders via the XHB. So again, a good sell-off Wednesday, Thursday, a nice rebound on Friday. And again, just kind of an inside hammer candle type look on the weekly. Same thing there with the ITB. These both can still go to about 68 if we do get another. I mean, ITB already kind of got there. XHB can still get to about 68 though. So we'll see if that can make one more little move here, but I think that's about it for the upside. For VNQ, same thing. Maybe it can get to 91, 92, but that's about all the upside I see for it currently in the real estate sector. XLF here on the financials. Again, nice rollover this week. Again, had a nice bounce, got through the gap there, held the 50, held the 20 moving average there by the end of the week. So that's a decent sign. I'm not sure where this wants to go here. I mean, obviously there's going to be resistance at this pivot and this pivot. If you get through that, there's not much more upside in financials, but they've had a nice reversal here. The one thing that does concern me a little bit with financial stocks right now is especially Goldman Sachs. So they had a very, very bad earnings miss. One of their worst earnings misses in, I think, the last decade. And it also came out there was a federal probe into, I want to say it was their consumer business, something to do with Goldman Sachs Marcus. There wasn't the right protections in place. Either way, I don't think that's even really the reason for this move here. I mean, the earnings definitely was a catalyst, but you take a look at that sell-off on Friday. Look at the volume there. That's very heavy. You had a bear flag here on the daily time frame. We broke out of that. That should have been support on the back test, and it held for 2 days, and then we haven't broken through it technically on a weekly close. We did test it, but that's an ugly looking candle there. And then take a look at the weekly. This is even worse. So you had a nice outside week last week, and then a gap down and a flush and on massive volume there. You can see the same thing here on JP Morgan, essentially. Nice move, outside move last week, and then really gapping down and gap and go to the downside on the weekly. And if you look at Goldman's peers, like Morgan Stanley, that actually had a very positive reaction to earnings, and it held most of the gains by the end of the week. Whereas obviously Goldman did basically the opposite. So I don't know what's going on. I'm just telling you that that's not a good sign when you see one of the biggest and most important bank stocks really fail to bounce with the market. And not only does it not bounce, but it actually flushes. So something to be concerned about there. We'll see moving forward. Maybe it was just OPEX related. I seriously doubt it, considering the volume there. We'll have to see moving forward here. Outside of that, broker dealers did hold up okay. Again, this can still get to 490. I'm not sure if it gets much past that, though. Crude here. So over to commodities and energy. Crude had, mostly a sideways week. We did technically trigger this inverse head and shoulders on Tuesday, and then it failed on Wednesday. So this is not a pattern to me. Doesn't mean it can't still trade up a bit here, but I wouldn't call that a pattern. And mainly because on the weekly, you still have this weekly inside bar. So I'll draw it in for you there. 82.72. That red bar high. Until you close above that on a weekly basis, this is still an inside bar bear flag. So just be aware of that moving forward. You could still get one more push down here in crude futures. But for right now, I'm kind of just like neutral to slight bearish on it. But again, just basically a sideways week here. Let's not make too much out of it until the market gives us direction here. XLE still holding up really well. Again, holding trend. It's really showing a sign of strength here. We did test that 91.50 area on Wednesday. We backed off of that, but again, it's still holding up really well. And again, just to visualize it there, you can see on the weekly, that red bar high got tested. If you get a close above that, this can go higher. XOP closed above the 20-week moving average here. So we regained trend, but again, you still have that big red bar there. So 150.32, that's your major resistance level here. But this is still holding up. But again, just be aware, you have a down move and you're inside of that. So technically, there is still some selling pressure in this. But again, it's holding up a lot better than a lot of things in oil services. Now, a lot of these companies are raising prices here. So, and again, OIH holding up really well. This can get up to 350, maybe even 360 here. Had a pretty steep reversal on Wednesday, and then it got a little bit of a bounce into the weekend. I still think this does have a correction here, but what can you say? It's holding up really well, and nothing to say it can't go higher currently. It's just been a tank lately. All right, let's go to uranium. So CCJ here. Again, nice pop on Friday. We went up here, consolidated a little bit of a kind of a sloppy bull flag. Thursday, Friday, nice bid. Still not above this red bar here. So until you get above that red, it's going to want to go touch it probably this week. So 27.02 is your resistance level. We basically almost got there on Friday. But that's your level. If we get a close above that, this can go a lot higher. URNM, same thing. So nice rally this week as well. And again, your level there is 36.74. That's your red bar high. You get a close above that. And interestingly enough, that kind of coincides with this downsloping trend line as well. So basically a close above this pivot would also mean a close above this wedge pattern. So definitely something to keep on your radar there on URNM for next week. But those are the levels, and uranium's had a nice move off the lows there, so we'll continue to watch that moving forward. Other commodities, DBC here, again, continuing to rally. So I said I like this level here on the monthly last week. And again, right into that monthly 20 MA, a close above 25.78 by the end of the month. I mean, there's still about a week, let's say 7 days left in the month. It can happen. If you can get a close above that pivot on the end of the month, that would be a really strong indicator moving into February. So we'll keep that on your radar for next week. in the following week. Same thing kind of with Mosaic, again, going into that 200-month moving average and getting a nice reaction. Again, a few weeks ago, I told you I liked that at the 100 moving average on the weekly, and we've had a nice move off the lows there, 42 to, 48 in the last 3 weeks. So nice move for MOS and TR, basically the same chart there. So the potash name's holding up pretty well as well. And ag having a nice move off the lows. Really the exception here in commodity space has been nat gas. I mean, some of it obviously has to do with we've definitely had a more mild winter. It does look like that is coming to an end here pretty shortly, but we have had a more mild winter. I think a lot of it, I'm not sure what's going on here, but it does appear that someone wants this lower for whatever reason here, whether that's so they can buy it lower, but the price action does not look like fundamentally driven. It definitely looks very algorithmic to me. And take a look here at I'll show you this support level first. So this is the level here going back to 2019, about $3, maybe $2.90. That's major support here for nat gas. And you can see here it took you basically over 2 years to get through this level and sustain above that. And it never got back tested. So usually when you test something for the first time on a back test, it should hold. Also, if we take a look at the daily, I don't show you guys MACD very often, but sometimes I do look at it. Look at the daily MACD here. You're basically, as far as this chart goes back here, you're at the lows, like absolute lows. And I think once this gets a crossover in this oversold territory, you're going to get probably at least like a 50% bounce, maybe up to $5, maybe even a little bit higher here on nat gas. We do have a contract rollover coming up as well next week, so maybe that's the catalyst for it. It is in backwardation as well, so maybe it gets a little bit of a gap down. Maybe that's kind of what puts it, is the final low. But some producers now are actually below their profit margin on this, which is not sustainable. So just some things to consider here. I mean, you're definitely much closer to support than resistance, and this has just been a one-sided, it's a very crowded trade to the downside, and when nat gas squeezes, it really doesn't take any prisoners. So I really like nat gas down at this level here, and I think it gets a major bounce. Risk is way, way skewed to the upside. But anyways, moving over here to the dollar index, DXY. I do like the dollar at this level here. Could it go a little bit lower? I wouldn't rule that out here, but I do think the dollar is into a buy zone. So just be aware of that here. Moving forward, I did a lot of work on the euro and the yen here, and I think they're about topped out. Again, maybe they could have one more little push up. Maybe, I don't know, maybe the FOMC is a catalyst for a slight push up here, but I think they are getting into resistance, and the dollar is coming into support. So I do like the dollar moving forward here. And if you look at the gold chart, as we get over to gold here, again, it's pushing up here. It's holding up really well. But again, you're going into a lot of resistance. So this trend line here, this was your breakdown pivot. That's where bag holders are. They will turn into sellers very shortly. So again, gold is extended. It's overbought. It needs to pull back. Your first major level here, on a weekly, this would be a huge level, is 1825. Your daily chart levels would be 1875 here in the near term. There's that pivot there and right here. But gold's holding up, and commodities tend to overshoot. So we could always see them go a little bit higher, just see nat gas if you want to look at things overshooting. But yeah, they've had a nice move. I do think they need to come in. And again, if the dollar does reverse, like I think it will probably put pressure on gold. So just be aware of that. Silver also holding up well. Look at this inside bar. So daily inside bar here going back to 1220. It's been a month now that it's been stuck in that range. Just straight sideways here. It is a good consolidation pattern. My question is though, sorry about that. There we go. My question is that if it doesn't break out at some point soon, is it going to roll over here? And I still think it needs to do that correction that we've been talking about. But for right now, it's holding up well. I will say it's a little bit of a divergence here that silver hasn't moved higher, whereas gold has. So it's showing a little bit of relative weakness. And if you take a look at, for instance, platinum has had a huge move off the lows, although it has backed off a little bit here. I still like platinum moving forward. And then copper as well. with a huge move this week. So we finally got above that 396 level, obviously, like we talked about. I do think copper is into some short-term resistance here in the 420 area, 420, 430. So that does need to back off. But again, like silver has not moved higher. So just be aware of these little divergences and little things here. But for copper, I do think it needs to come back to about 395, $4 before it can move higher. But it's had a nice move there off of the lows. Anyways, let's get back over to, let's cover Bitcoin really quickly. So Bitcoin has had also a nice pop off the lows, and we did negate this weekly inside bar. So congrats to the Bitcoin bulls here in the near term. Nice move off of the lows. This might go to 25,000. So there's your 50 MA on the weekly, then your pivot high there. That will be major resistance moving forward. On the monthly, you are above this red bar high currently. So we'll see what that does by the end of the month. A close above that would be a major sign of strength. I don't necessarily think this is a bottom though. So, and I want to explain mainly, first of all, structurally, this looks a lot more like a short squeeze than anything. When you just go straight up like that, and just to kind of refer you to another chart here, like Goldman we talked about. This is when we were short here with carnivore trades. When you just go up like that without any pullback, it's a short squeeze. It's very similar type look here on Bitcoin. Also, if we look at like historically, and I'm just going off of sentiment. I mean, we're up 50% off the lows here, almost. 15,000 to, okay, not quite, but quite a bit off the lows here. 15,000 to 23,000. If you look historically, though, first of all, sentiment people are already calling for all-time highs this year. When a bear market ends, and this has been a bear market in Bitcoin, usually it's a while before people even, the lows are made for quite a while before people even fathom calling for getting bullish on it. And you take a look at 2017, we had a nice sell-off. We did have a little rally here, but it was very range-bound for a long period of time. So even if we have put in a bottom, which I don't think we have, I do think we need to have one more flush out. But even if we have, I wouldn't be looking for new all-time highs this year. I mean, think about what that would look like for this year. I mean, so you're starting here. We'd have to go, it would have to be a pretty, I mean, and you look at the last time, look at how you had to kind of put almost like a cup and handle. It doesn't just V-shape straight back to all-time highs after a bear market. So just my thoughts there, but it's holding up well. We'll respect it here for the meantime. Again, 25,000 is your major level here in the short term. If it does, it's not that far away now. 22.8 for Bitcoin. $3,000 is really nothing. $2,000 is really nothing. But just want to point that out there as far as kind of the longer term, medium to longer term projections there on BTC. Anyways, back over to the spiders here really quickly. Again, earnings this week, I believe Microsoft, Visa are the big ones here. We have a few transports reporting. And then the big names are Amazon, Google, Meta, and Apple reporting next week. Not this coming week, but the following week with the FOMC. So we could get a lot more chop shop. I wouldn't rule that out. But again, bottom line though, if we do start to have more of an uncontested rally, that would make me a lot more bearish going into the FOMC if we were overbought. So anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you guys all next week.